Hey everyone, welcome in to another daily editorial here on the KE Report. We're going to be talking more precious metals stocks and even more so in the silver space as we're talking with Dave Erfle, founder and editor of the Junior Miner Junky. Now, Dave, personally, I've noticed a couple juniors or a few more juniors that weren't getting market love. They've picked up interest. We've seen some higher volume. We've seen some stronger moves higher in some of those gold juniors, and then also in some of the silver stocks. Those have come to life too, even more so down into some of those juniors. I know still it's not a rising tide lifting all boats, but overall, I have noticed more life in some of the junior sectors, and those standout stocks in the broad precious metal sector continue to do well. So Dave, what has caught your attention, either on the bullish or the bearish side, for the underlying precious metal stocks, especially down into some of the smaller ones?
Yeah, Corey, it's really interesting what's happening with the mining sector in relation to the gold price and the silver price. Last week, you had both the GDX and GDXJ, but not so much the SIL and SILJ ETFs break down from a bullish weekly flag that's now 4 weeks old after we had that huge move in the beginning of September in the mining sector. So we had GDX and GDXJ come down and quickly test their rising 50-day moving averages and then pop right back up and remain in those bull flags. And that bull flag is happening as a consolidation right below stiff multi-year resistance. So that I think that bull flag is those resistance levels are trying to become new floors as the gold price continues to go higher. But another interesting thing is that I saw was both SIL and SILJ made 52 week highs last week, and they're consolidating with a more bullish bias, while GDX and GDXJ did not make new 52-week highs last week. And this is all happening while silver has been showing a more relative weakness to the gold price lately. I mean, it's consolidating in a larger range, right? It's like 3250 is this brick wall in silver right now. It gets above there intraday, but it can't close on a weekly basis above 3250. But you have seen silver make 11-year highs, and you've also seen the GDX make an 11-year high on a quarterly basis. I mean, it's basically silver and the miners have been trading in lockstep for the past decade and showing and not being able to catch up to the gold price yet. So it's really interesting to see the silver stocks show relative strength to the gold stocks here. I think you can chalk that up to smart money coming into the silver sector and seeing that the silver price has been lagging gold, and silver always catches up with gold and ends up going higher, on a percentage basis during precious metals bull markets. So I think you're seeing some smart money starting to come into these quality juniors, and you've also seen some M&A in the silver junior space. So I think silver's getting a bit more attention from the smart money here.
Yeah, Dave, I think you nailed it. I think that there's a lot of people that see that gold silver ratio still being a little out of whack and expect the catch up trade, and not just in the silver price, but also the silver equities, and they're starting to position accordingly. I also think we had some positive political developments in Mexico, which we got a little bit into last time, but I think that fed into a nice bounce we saw across the board in the Mexican silver stocks, which a lot of them are based in Mexico. But when you're looking at silver stocks, do you like having a basket of producers and then some developers and some explorers? I know that you're mostly into the development stage companies. And if it's the developers that's your focus, what attributes do you look for? Do you like ones that have a silver gold mix versus a silver base metals mix? Is there jurisdictional ideas? Is there something you're looking for in economic studies? Maybe put some color around what you look for when you dial down into the silver stocks.
Yeah, I like to balance the risk jurisdictionally and also sector and subsector. I mean, in my retirement account, I have a lot of the big boys with a lot of leverage to the silver price. But in my junior account that I share with my subscribers, I have a growth-oriented producer, and I have mostly development stocks, and one earlier stage silver junior. I'm still not getting into the grassroots, very early stage juniors just quite yet, but I noticed there's several, and fortunately, I hold a few of them. They're on the verge of breaking out along with the along with the mining sector. So they've basically been trading along with the GDX and GDXJ while most of the juniors have been lagging. So you're starting to see the cream rise to the top in a lot of these, not only silver juniors, but in gold juniors as well. But yes, it's always nice to have a little bit of gold mixed in there. But most of the silver juniors that I own are mostly silver and base metals in their deposits. It's very rare to find a primary silver deposit and it's primary silver projects. And those are the ones that do really well in bull market. If you've got a high grade primary silver project with upside potential, with showing a lot of blue sky potential, then that junior is going to outperform the market.
The silver sector is so interesting, I find, because as you just said, Dave, look, there are very few primary silver deposits. There are even fewer primary silver mines out there, even when you consider just how much silver is mined around the world and how much of it, the majority of it, comes from not primary silver mines. Does that change your investment strategy at all then? Because look, there just aren't as many silver dominant mines out there because so much silver comes from other mines. So are you still simply looking for that same leverage, that same takeover ability of these stocks, or is it simply that more leverage play on a bull market for silver?
Yeah, it's basically the takeover leverage. I mean, I'm putting my CEO hat on when I'm looking at these companies. If I was a CEO of a major or a mid-tier and I'm looking to grow my production, I'm looking for more ounces on the street, then those are the companies I'm going to gravitate to and start accumulating for myself and my subscribers, the ones that I see as early strong takeover targets. Later stage takeover targets right here, I wouldn't get into because I don't see the upside. I have to see at least 3 times upside in a junior before I get into it. And if it's something that's already ran and the market cap is getting close to 750 million to $1 billion, I'm not going to get into that because I don't see the 3 times leverage in something like that. Sure, the stock's going to do well and it'll probably get taken over and you might get a double if you're lucky. But I like the big leverage. If you're going to take chances in this sector, you want to have the companies with the big leverage, and that's earlier stage companies that the market has not caught on to yet, or basically you could get into there's a few that I hold that are finance stage or close to finance stage, but they're in Mexico, so they're getting hit with that permitting risk in Mexico. And like Shad just mentioned, we've seen a nice pop in a lot of these companies because that risk is coming off. I think that risk is fully priced in, by the way, to a lot of these silver juniors that are operating in Mexico.
Well, Dave, I want to ask you about the optionality plays because silver is already highly levered to gold. Typically, it hasn't been as much this cycle, but if it does kick in, the silver stocks as a group even have more leverage, and usually the silver ETFs outperform the gold ETFs during bullish phases. So most people are expecting those silver stocks to really run hard. But you talked about torque and leverage. The most torque in silver is with the highest cost producers that see the biggest margin expansion, and they're usually not the best quality producers. They're the lower quality producers, but they have the most torque. And optionality plays are the other ones that have the most torque. Lots of ounces to the ground that are maybe not that exciting, maybe lower grade, but in a rising silver price, they tend to trump everybody else as far as to the upside. Do you ever have any interest in the, I guess, optionality of high cost producers or big bulk tonnage deposits that just get leveraged because the silver price is running?
Well, it depends on a few things. It depends on share structure because I know there's a couple of them out there that have pretty much blown their share structures while building a company like that. And also, I would have to, like I said, I would have to have my CEO hat on and say to myself, does this look like a company that a major is going to get interested in? Because there's several of these companies that are running smaller mines and they really don't have the blue sky upside that these majors are looking for. They're not going to These majors or mid tiers are not going to buy any of these companies that are producing silver, even if they're producing if they have free cash flow. And like you said, the silver price runs to $50 and all of a sudden they're creating a lot of free cash flow. Majors aren't going to get into them unless they're producing in size.
Dave, how do you go about analyzing these multi-asset small silver producers? There's not tons of them, but there are a couple of them and a couple of them that have some plans to continue to bring on these small mines that, hey, look, they can cash flow, but they don't truly move the needle for major investors. How do you view those, again, multi-asset small producers in the whole scheme of the silver sector?
Well, it all starts with management. Is it got a strong management team? Have they been able to raise capital at higher prices each time? And have they been able to raise capital recently without a warrant? And have they been able to grow the project, grow the company without dilution? Because some of these companies, they're multi-asset producers, but they're growing with dilution, meaning they're buying other companies with their stock. So I'd rather look for a company that I feel is going to be acquired by a junior like that instead of a junior that's acquiring like that. So let's say this happened to me recently where I accumulated for the second time, I accumulated shares in a company that was de-risking a very good project, and they were getting close they were in the middle of construction and they were about a year away from production. Well, the first time I did really well with it and I sold the stock, and then I got back into it a little too late, and the stock was lower than my cost when it was taken over by a junior that for the second time took over a company with their shares. So meaning their share structure had now grown to almost a billion shares. I liked the company, but I didn't see the upside potential. So I waited for the stock to get to my cost, which it did, and then I sold it and used the proceeds to buy half positions in two other companies that I saw more upside that I see eventually being taken over. So I guess the short answer to your question is that if I see three times upside or more, then yes, I'll start accumulating it.
Well, Dave, just following up, I guess, on the prior two questions, maybe I didn't ask my question the right way. Like, to Corey's point about these multi-mine smaller producers that are in the silver space, there's probably 7 or 8 of them. They actually have the most torque. They'll outperform even the best quality companies. So if you're looking for investment upside where you get a multi-bagger, in 2016 and in 2020, some of them went up 5x to 10x, and the biggest producers did not. They went up 2 to 3x. So is it more important for you that they're a takeover candidate, which most of those companies are not going to be takeover candidates, or is it more important to have the upside leverage?
Yeah, it's more important for them to be takeover candidates.
All right. Well, then, Dave, I also have another question when it comes to resources, silver resources. I feel like I've heard from maybe a handful of different CEOs claiming that they have the highest grade silver resource. Now, we can analyze that a number of different ways, size, all kinds of different factors that come into it. But usually I simply just like to look at grade, but again, different categories. How do you go about analyzing silver resources then?
Yeah, you take a look at the jurisdiction and you take a look at the grade and you take a look at, like I said, management again. If the management has a strong track record, they're serially successful at building these companies, and they also have a large interest in the company as well, owning a lot of the stock. So they're fully aligned with shareholders. So they're going to make sure that the stock doesn't get over diluted as well. And blue sky potential. The project has to have a district scale size land package. It would be nice if a major has come in and given them a strategic investment, not only on the project, but on other projects in the future as well. That shows me that this major or mid-tier that's made the strategic investment believes in the company, believes in the management team, and believes that they have a chance to find other things maybe in that district or maybe somewhere else and de-risk them positively. So a strategic investment goes a long way to justifying the deposit and the stock to the market.
What about the economic study numbers, like the internal rate of return, the payback period, the NPV? Is there a certain size of deposit you want to see? Because people put them out on all different size projects, but obviously the bigger the project, the more appealing it would be to a major. But even some of the small projects have compelling economics. So do you weigh any of that into it?
Absolutely, yes. I mean, that's if I and I'll give another example of a company that I recently recommended to my subscribers. What I do basically is before I invest in a company, I'll do a massive amounts of due diligence, speak with the company, and write up a full detailed report and send it out to my subscribers, telling them, "Hey, I'm going to start accumulating a partial position in this stock." And the company I did that recently with, they put out a fantastic PEA recently, which I think is going to attract a strategic partner. The market reacted somewhat to it, but not as much as it should quite yet because they don't see the access to capital. I think they don't see the company having the access to capital to go to the next stage. And I believe that this report was strong enough to attract that partner. So I purchased a half position and I'm waiting to see if that takes place. And also, the stock has carved out a really strong accumulative bottom, an inverse head and shoulder base that looks very close to breaking out. So I think the stock needs some positive news like that. They also have some more drill results coming out pretty soon. But this initial PEA was very strong, and it shows that there's a lot of blue sky on the project also.
So, Dave, how much rotation have you been doing within your portfolio? I know you like to lock into positions. You're not so much of a trader. You want to ride the higher quality stories for a longer period of time. But again, we are starting to see some money rotation. At least I think we are in this sector. Are you rotating some of your money?
Yes, there's one company that's in my top 10 that is very close to tripling. I've told my subscribers that I'm going to be selling one third of the stock once it hits this price. It's very close to hitting this price. And basically what that will do is it'll take my investment capital out of the stock. It's always easier to hold a position for longer when you've taken your original investment out of the stock. So with those proceeds, there's four companies that I'm still in the process of accumulating. And there's also one other stock that is getting close to my cost that I'm going to sell because of jurisdictional issues with the project. So that's basically what I'm doing with my portfolio right now. I'm just waiting for a few companies to reach certain prices so I can rotate that capital into other things.
Dave, we were talking a little bit off mic, and you mentioned it in the onset of this interview that you actually have two different accounts. You have the trading account or not trading account, but the portfolio that you share with your subscribers. But then in your own personal account, you also still have exposure to some of the bigger names. I guess I would also ask you, what's the balance that you have between those different buckets, like maybe in percentage terms or just a rough idea? Like, is it a one third in the safer names and two thirds in the more speculative, or how do you break up your portfolio between the safer, bigger producers and royalty companies and then the more speculative juniors?
Yeah, and by the way, I also share that account with my subscribers. It's funny you asked that. Before 2023, I never invested in majors, in large royalty companies, because I like the torque and the upside and the leverage in the juniors, because I've always done really well in the junior sector. So I basically stayed away from the majors. But in late 2022, 2023, these companies got so cheap, and I just figured, hey, I got to start getting into some of these in my retirement account because the downside is limited, if nothing, because I see the gold price going higher. And these juniors have a lot. I mean, these majors and these royalty companies have a lot of catching up to do to the gold price, as well as the juniors. But the majors and mid tiers, especially, didn't have very much risk. So that turned out to be the right move because that portfolio has done a lot better than the junior portfolio. But as far as size is concerned, it's basically as far as the mining sector is concerned. I have about, I don't know, I twice as much invested in juniors as I do in the majors and the royalty companies.
Bring on that risk, hey Dave. Why not? That's why we're all in here. Come on, man. Don't invest in this sector to be safe. Invest in this sector
That's
for that
right.
torque. Yeah, I hear you. That's why I think everybody should be in this sector rather than just trying to make some safe money. But you know what? There seems to still be a very good opportunity here. I sure like the action that we're seeing in this sector more so than a lot of those runs over the last decade that we saw where stocks skyrocketed and then immediately turned back over. This sure seems more sustainable to me, but only time will tell. Dave, great chatting with you. Again, Dave Erfle, founder and editor of the Junior Miner Junky. We'll touch base with you next week, Dave. Have a great rest of your week.
Thanks, guys. Always great talking to you.